before that, let's ask our experts which are the stocks that they are eyeing out for this Samvat. We have Neeraj Diwan who's joining us on the fundamentals this afternoon. Along with Neeraj Diwan, we also have Ashish Kyal and Kunal Bothra to help you with the technical topics. A very good afternoon to all three of you gentlemen, and also warm wishes to all three of you on this occasion of Diwali, and also extending it to your team as well as your families. All right, let me then get started with the stocks. We have three categories for our viewers. One is the safe sparkler, where you can look at stocks which are safe bets to take for your longer term portfolio. Apart from that, we also have the high risk rockets, which are the stocks that can show potentially strong growth, but they are in for the bold investors, while those who are looking for value bombs, hidden opportunities that are ready to reveal their worth, we have we have those value picks as well coming in from my experts. With that, let me kick start with the first category, that is the safe sparklers. And Neeraj Diwan, coming to you, which is that one stock that you think is a safe spot to park your money in for the new Samvat?
Yeah, happy Diwali to you and all the viewers. Yeah, the safe sparkle I've chosen is DLF. So it's a 75 years plus old company into real estate development and real estate management experience. So they are very strong in the Delhi NCR region. So they have been growing, even the sales, they have been growing 53% net sales booking in the last 3 years. And they expect to continue the momentum as far as the launches are concerned. They have very good launches scheduled in the next half of this year. So that will keep the momentum strong for the current year. Plus, they have a very good portfolio for rental for the annuity, where they plan to have about 6,600 crores just from the rental business. So that is going to be an annuity for them. That will also keep on growing at 20% profit per year. So it's a very good old company, good management. They're synonymous with luxury. So they have launched a lot of luxury projects in NCR, and they have the track record of selling them in the first 2 3 days, the last 2 3 launches that they've done. So I expect this stock to continue doing well based on their development portfolio and the rental portfolio. And I have a target of 975 for this stock for 1 year, and it's a stock per portfolio, so one can even keep in the portfolio and ride for a longer term also.
Right, Neeraj, DLF is your pick with the target price of 975. As you rightly pointed out, DLF does have a strong launch portfolio, long launch pipeline for the second half of FY25. But coming to you then, Kunal, tell us, what are your safe sparklers for this Diwali?
So happy Diwali to all of you as well as all the viewers of ET Now. I think in terms of the safe sparklers, I would look out for two stocks, and both of them are larger cap names. The first one is ITC. And I think after quite some time, the stock looks to be on a very strong footing. So far over the last many weeks and many months, we've seen that the stock had gone through a phase of a very rough kind of volatility from 500 to a point when the stock was sub the 400 mark. It's made a very good recovery to come back again closer to that 450 to 500 range. So I think from current levels, ITC is something which I would be bullish on, and my expectation is that the longer term uptrend, which started off 3-4 years back for ITC, that is now intact, and could probably get back into a second round of momentum. 700 as a target is what I would probably pinpoint for ITC, with stop loss closer to 400 levels. BEL, Bharti Electronics, is the other stock which I would be very bullish on, and my sense is that many of these so-called defense PSU names, these stocks would probably have ended a larger part of their correction. So something which has been going on for the last 4-5 months for these stocks. Even BEL was at the front of this correction from 330-40 levels towards the point when the stock made a low just around the 250-260 mark, which means a correction of almost 30% seems to have played out for many of these defense counters as well as the PSU names. So BEL is something which I would be bullish on. My expectation is that the stock should come back to that 340 plus levels over the next 6 to 12 months. Stop loss for this trade could be kept at 245.
All right, so those are the safe sparkler bets coming in from Kunal, ITC and Bharat Electronics. From Neeraj, it was DLF. While Ashish, what are your safe sparklers? Where do you think their safety lies?
Hi, I would like to wish every one of you and all the viewers a very happy Diwali. I'm sure this is going to be a blaster year for our markets as well. Within this, I think the safe bet is going to be Poly Medicure. We can clearly see the sector has been very supportive to the up move, which we are witnessing right now. and the stock has managed to break its earlier hurdle also of 2,700, sustaining back above that. So the overall tone for Polymedicure remains positive. We can expect the stock to move towards the level of around 3,600 or possibly higher on the upside, and one can maintain a stop loss of 2,600. The view is little medium term perspective, and for the coming year, I think the stock can even cross that 4,000 mark as well. So that's positive on the Polymedicure. And the other stock which looks bullish to me is Piramal Pharma. We can clearly see a very strong breakout in today's session. Also, the stock over the past 5 days has given a spectacular move from 220 levels or below 220 levels, now about that 270 mark. So the overall trend for Piramal Pharma remains bullish, and we can see the defensive space, the pharma space is outperforming now, and we can expect Piramal to reach towards the level of around 350 on the upside. Looks very interesting at this juncture for the third wave on the upside. And on the downside, one can maintain a stop loss of 240 for the stock.
Piramal Pharma is your safe bet, Ashish. But now with that, we have already given you all the safe sparklers for this Diwali. But let's now get started with all the high-risk rockets, the stocks that are ready to fly off. That's why we are calling them the high-risk rockets. And I'll come to you, Neeraj. Tell us which is that stock that you think is a high-risk rocket which is ready to fly off this Diwali?
Stock I have chosen as a high risk stock, it is BCL. Basically, the company which started in 1976 has now established itself into a leading grain-based ENA and ethanol producer. The company is into two sets of businesses. One is definitely ENA and ethanol. Other one is edible oil business. Edible oil business is a very low margin business, which they're going to start phasing off from the end of this year. And the company will purely become will play into ENA and ethanol, where they're expanding capacity. When I first looked at this company about 2.5 years back, it was a 500, 600 crores market cap company. In 2.5 years, it's already at 700 crores market cap. So they had a capacity of only 200 kiloliters per day for ethanol and ENA at that time. Now they're at 700, and they're going to further expand to 850. In addition, they're even going for biofuel capacity. So they are going to have 75 kiloliters per day capacity in biofuels also, which segment can be a very high margin business for them. So their margins will improve, EBITDA margins will improve with edible oil coming out, and the ethanol, ENA production increasing with capacity increasing, and the new capacity of biofuel coming. So this, I think that with the margin improvement and the quality of business improving, my 1 year target is 80 rupees for the stock. And I think next 2-3 years, they will continue showing their improvement as far as the top line and the bottom line is concerned because of value addition.
All right, so those are that is the high risk rocket pick coming in from Neeraj Diwan. But when we come back from break, we will get you the picks coming in from both of our technical analysts, as well as tell you which are the value bombs they're spotting in the markets right now. Don't go anywhere.
Welcome back. You're tuned into Cracker Stocks, where we are taking you through all the stocks that can light up your portfolio this Diwali. So let's resume then. We were talking about the high risk rockets that are a little risky but are ready to fly off this Diwali. Coming to you, Kunal, tell us what's your second high risk rocket pick for this Diwali?
Yeah, there are two stocks which I would want to highlight. First one is UPL, and this could be interesting because the stock seems to be coming back into a very good support territory. The risk reward is coming out to be very attractive for the stock, and it's confirmed breakouts on indicator fronts, first on the weeklies as well as on the monthly charts. So I believe on the back of this, there could be a substantial potential going forward for the stock. So I consider it high risk because of the high beta nature of the stock price. But then look out for targets at least in the range of 750 is what my expectation is for UPL over the next 6 to 9 months. And the second one which I'm suggesting is a really very high beta stock, and that's Wockhardt Pharma. A very, very interesting chart for the last, I think, 3 or 4 quarters. The stock has shown successive positive gains. It's looking very strong on the charts. The momentum is on the side on the stock price. The volumes have been exceptionally strong for the stock in the last 4 quarters of this huge uptrend for Wockhardt Pharma, and my sense is that the stock should at least scale past the levels of 1500 to 1600 over the next 6 to 12 months.
All right, very interesting actually, Kunal, talking about UPL particularly, because I remember that last year when we were talking during Dasara and we had a special show and you said this was one stock that you were pretty upset about because it never delivered. Every time you saw or you and the charts indicated there would be a breakout in this one and it did not actually deliver at that point in time. Do you think this time hopefully it will not trick you?
Yeah, it seems like because there's been a dramatic change to the stock price. So I always maintain this stance, Cheryl, that when a stock has to change its trend, it changes the behavior. So when from a high beta stock, when a stock gets back into a moderate beta or lowers the beta of itself, that's a change of behavior, and that's one of the primary reasons why I believe that this time around the stock should not disappoint.
All right, hopefully this time around UPL won't disappoint, and that's why it is making into Kunal's list of high risk rocket. Ashish, over to you, and which are the two stocks that you have for our viewers?
See, the high risk rocket for me is going to be IRFC. We can clearly see a very sharp rise. The stock has shown on the upside over the past 2 or 3 days, but it has bottomed out around that 134 mark. A good correction was witnessed from 230 levels to 134 and then now reversing back on the upside. So this is high risk, but there is a possibility of the stock showing a very good traction on the upside, may reach towards the previous high levels of around 220 as well. So that can be the target on the upside, and one can maintain a stop loss at 140. So the overall structure is bullish. We can expect the stock to start the third wave. 220 is the target for IRFC. And the next stock, which is high risk but can be highly rewarding, is Kirloskar Brothers. We can clearly see the stock has formed a double bottom pattern around 1600. Showed a very strong move over past again few days. Volumes have picked up significantly, and we can expect the stock to move towards a level of 2300, 2400 on the upside. That can be the target, and on the downside, one can maintain a stop loss of around 1700 for the stock.
All right, Ashish, Kirloskar Brothers and IRFC are your picks as far as the high-risk rockets are concerned. But let's move on to the value bombs now. Value bombs which have been undervalued so far but can give you rewards in the future. And for that, let me come to you first, Kunal. Tell us, what are your value bomb picks?
So this is an interesting pocket, and I'll highlight two stocks over here, and both of them are differentiated names. The first pocket is actually the sugar space, and from the sugar stocks, the best performer in the pack so far is Balrampur Chini, both in terms of the price metrics, in terms of the stability. Look at the way the stock has moved in the last, I think, 3-6 months from 400, 450 odd levels, which was a major time testing zone for Balrampur Chini, where the stock spent a lot of time sub its 200 moving average. It's made a fresh high, crossing levels of 600, and then I think at one point the stock was very close towards the breaking of even the 700 mark. So I believe that in this phase of correction, one should look to try and buy one of the strongest name from the sector. And my sense is that once the sugar seasonality comes back, I think Balrampur Chini could be one amongst the top picks and the best performers from the entire pack. So my expectation is that the stock should be good for a target of at least 850 in the next 12 months. The second stock is NOSIL, a very interesting chart because on the longer term basis, on the monthly chart specifically, the stock is on the verge of forming an inverted head and shoulder pattern. It's very rare to see these kind of strong chart patterns for a stock on the longer term charts, at least in this kind of a market. So I believe at current levels of 270, 280 approximately, NOSIL could also be a good addition from a value perspective. Look out for targets in the range of 380 on NOSIL.
All right, so that's the take coming in from Kunal when you talk about value bombs. One is NOSIL, the other one is Balrampur Chini. Balrampur Chini is expecting a target in excess of 800, 850, right? Kunal, is what you said?
Yes,
in the next 1 year?
Correct.
All right, next 1 year, the target for Balrampur Chini is 850 rupees per share coming in from Kunal. But Neeraj, before you talk about value bombs, value bomb, one of them that Kunal has picked is Balrampur Chini. It's a part of a sugar pack. Sugar counters are also dependent on what exactly happens globally as well. So how should one actually view this sector when you have to view it fundamentally? Also, post that, you can also tell us what your value bombs are.
Yeah, definitely sugar sector is looking interesting, with government also opening up, so the quotas for the sugar sector. And, even the North, they're not expecting any new elections coming in. So I think this sector can do well over the next 6 months to 1 year. So I'm positive on the sugar sector as a whole. Plus ethanol definitely is one, with one part of the sector which is doing well and which will continue doing well because the demand from the oil marketing companies and the government, target of 20% mixing. So that will also continue giving a good boost to the profitability for the sugar company.
All right. So
And
that.
yeah.
So that's the take coming in. So you're also actually positive on the sugar space at this point in time, given the fact that there are a lot of multiple factors actually fundamentally also that are actually working in favor of this entire pack. So what's your value bomb? Is it from the sugar pack or is it a surprise for all of us?
No, my value bomb is from the textile space. So it's a very old company called Sriram Silk Mills Limited. So it's available at a very reasonable valuation. It has very well-known brands which are distributed by a wide, distribution network, retail and distribution wholesale network. So the brands which are most common are Sriram, J. Amstead, Tadini, Augsburg, Casa Moda, Mozo, which are very widely distributed. The company is also expanding its reach by launching two new brands, one in the fast fashion category that's called Z Code, and another in the ethnic wear category that is Devo. So these two, they're going to have 30 stores which will open by end of March 2025. And then they will expand it further depending on what, the feedback or what they get from the already opened stores by that time. So the revenue mix right now is fabric 82% and ready-made garments, 18-19%. So as the value mix improves towards more of ready-made garments, the EBITDA margin will go up further, which right now also are a healthy 14%. So, by end of the last quarter results, the company was saying that, the demand has started picking up because we're seeing good demand coming from the beginning of the festive season. And, the festive season just started, so this quarter can be strong for them. And last quarter is normally also very strong for them. So even for this year, I'm expecting a good 2,300 crores kind of a top line, then 220 crores of EBITDA. So that gives me a target, 220 crores of profit. So that gives me a target of 525 for 1 year for the stock.
Right, Neeraj, Sriram Silk as a Diwali pick, how metaphorical is that? But as I can see, they've also issued a bonus for all their preferential basis to all the shareholders as of today. But moving on to Ashish, coming to you, tell us where do you see value?
See, if you look at the first value pick can be Paytm. We can clearly see the stock has been beaten down very sharply, but over past 1 year, it has managed to recover back half of what it has lost. But still, there is a lot of room for it to catch up on the upside. So I think Paytm can be a value back over here. We can expect the stock to move up towards the level of 1,000 on the upside, 1,000, 1,200. That can be the target range for Paytm. And on the downside, I think 650 is going to provide a very interesting support for the stock. So Paytm, one can create long positions here. And the next stock as a value pick is going to be CDSL. CDSL, we can clearly see over the past 3 years, the stock has been in a very secular bull trend. And over the past 6 months, it has shown some kind of a consolidation or a correction in the sideways trend. So it looks like it has now relieved the oversold state. Overbought state, and is now getting ready to again move back on the upside. So one can create long position on CDSL, expecting a target to be around 2,200 on the upside for this stock. And on the downside, one can maintain a stop loss of 1,300 levels.
So those are the value bombs coming in from Ashish as well. That is Paytm as well as CDSL. I'm sure all of them who've actually entrusted their faith in Paytm and actually bought it at dips will be happy listening to the target that you're setting for this particular counter as well. But since it's Diwali, which means that you're all is set for a bonus, and Kunal, I'll come to you for that bonus. Any multi-bagger that you are actually spotting when you talk about the charts? I know this morning I put you in the spot as well, where you gave some picks to our viewers for deal, no deal, but right now for cracker stock viewers?
Well, yeah, and I think multi-baggers in this kind of a market is something which is very, very tricky. But then there's one chart which is standing out, very strong, and something which I think, I believe holds a lot of potential. And that's Jubilant Pharmova, a stock which I think is trading at 1,200 rupees approximately. So I think when I look at the charts over the last 10 years to 15 years of charts, I think it's been an exceptional mover. the stock has managed to break past about 900 levels in a very rare kind of a formation. So there are two important formations which are happening for Jubilant Pharmova. One is the stock founding a major rounding bottom on the long-term charts, and this is almost like a 10 to 15 year kind of a chart which I'm talking about. And the second, the most important, is a cup and handle pattern breakout about the 900 level. So the stock is already at 1200 rupees, but we've seen historically that when stocks break decade-old rounding bottom formations, those stock eventually the next 3 to 5 years become exceptional movers. In case in point, few of the examples which I highlighted few years back with the likes of Anant Raj, Tata Motors, etc. So I believe Jubilant Pharmova could be another stock in that category.
All right, so you said Jubilant Pharmova, you expect it to be a multi-bagger, and if I'm not mistaken, the chart that I just saw for just 52-week, spectacular returns coming in for Jubilant Pharmova. I'm not sure that if there was some sort of a returns or adjustment in the stock price, but last 1 year, I think in excess of 100% or 200%?
Yeah, 120% return so far this year, but it's come after almost 8 to 10 years of grind for the stock.
All right, so that is a multi-bagger pick coming in from Kunal for all of our viewers, and I'll not put Neeraj and Ashish in the spot like I did for Kunal, but thank you so much, gentlemen, for joining us on the show and also sharing your picks with all of our viewers. A happy Diwali once again, Kunal, Ashish and Neeraj, and to all of your family members as well as your team. Thank you so much for joining. Ankita?
All right, with that, it's a wrap on this edition of Cracker Stocks. We'll see you soon next year with an even bigger avatar, like Sharar mentioned. But yes, wishing all the viewers a very happy Diwali.
No, but we will be back next week as well to take you through Market Fatafat as well as Buy Now Sell Now. But for now, it's a goodbye from Ankita, myself, our producer Somashri Shriyansi, as well as the director Trevor and Ravinder. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.